So 2023 will be remembered as the year that Bitcoin became financialized. We had BlackRock as well as multi-billion-dollar banks from all around the world embracing Bitcoin. And now most people are saying Bitcoin is going to become digital gold, right? Wrong. Today, I'm going to show you guys 5 charts that proves why that narrative about Bitcoin being digital gold is absolutely ridiculous, and why we should actually be looking at Bitcoin through a different lens, and why the last thing that we should want as Bitcoin holders is for Bitcoin to become financialized in the traditional legacy systems. And we're going to do all of that by looking at 5 charts today. So let's get straight into the first chart I want to look at. So we're going to do that by looking at this chart here. This is one of my favorite charts, and all it is doing, it is pricing the Dow Jones, which is supposed to be one of America's largest stock markets, and it is dividing it by gold, okay? Gold has been money for the past 5,000 years, and we can see a pretty clear trend here. Before central banks were introduced in the early 20th century, and they financialized our global economy, let's have a look at what was actually happening to the stock markets. Equity markets, when divided by gold, actually traded in a very predictable, very narrow range. So a consequence of giving these central bankers complete reign over the monetary system is the fact that money today is losing purchasing power, okay? We can see that $1 back in the 1913 is only worth around a couple of cents today, okay? The US dollar, the best performing fiat currency, has lost 98% of its value since 1913. Now, what does that mean? That means that you actually have to invest your money. Gone are the days where you can just simply go to work, specialize in a trade, accumulate savings in excess, and store those savings in your savings account for a rainy day. When you try to access those savings when it's raining or in a rainy day, they're pretty much worth nothing. They're worth absolutely peanuts. So that means that everybody today has had to become an investor. They've had to become a gambler, a speculator, trying to speculate and actually outpace the debasement of their currencies just to have some savings in the future. Naturally, this has meant that asset classes have performed exceptionally well because people are looking for somewhere to put their savings. They're buying 10 houses. They're putting all their money in the equity market. And guess what that means for wealth inequality? That means that simply the little guy cannot keep up. It's only the rich people who can get access to these super cheap loans because of their connections to their cantillionaires in the fiat system, and they can go out there and buy 50 damn mortgages with their super cheap interest rates, build up this massive property portfolio, and it just continues to go up and to the right as central bankers lower interest rates, okay? So this is obviously terrible. The financialization of the traditional system is a bad thing for society and wealth inequality and just general fairness, okay? I don't want equality. Again, I don't think that should be something we should be striving for. I think we should be striving for a more fair monetary system, a system where anyone around the world can store their monetary savings in a money that can't be debased. Very simple. What people get access to buy a massive property portfolio of 20, 50, 100 homes? Not many people, okay? Think about how many people are unbanked around the world. You can only buy a home if you have a bank account. Don't forget that. There's 1.8 billion people from all around the world who cannot even get access to a bank account. So now, where does Bitcoin fit into this picture? Why is Bitcoin the great definancialization? And why do I think it's ridiculous that we should want Bitcoin to become digital gold? I actually think it's the least likely outcome that Bitcoin just becomes just another asset class and why it's digital gold. I'm going to explain all of that in a minute, but I wanted to first give credit where credit is due. This video is based off a phenomenal article titled Bitcoin is the Great Definancialization. It's written by Parker Lewis. If you want to learn a little bit more about this topic, you can read this essay online, but if you prefer to actually read the physical thing and have the essay in your hands, you can also read it in edition 3 of the Bitcoin Times. You might be able to see that one over my left shoulder. It is a collector's edition. Again, guys, for those of you who don't know, there's only 2,100 copies of each edition of the Bitcoin Times printed. If you wanted to get your hands on one of these collector's items, that also includes essays from Jeff Booth, Giacomo Zucco, Alex Svetsky, Eric Kaysen, as well as Parker Lewis, you can pick up edition 3 and you can get 21,000 sats off that puppy if you use a promo code CoinBeast. Highly recommend you get your hands on one of these puppies. As you can see, the artwork in each edition is absolutely gorgeous. Now, let's get into wrapping up this video. Why is Bitcoin the great definancialization? Well, I love this chart right here. It shows all of the market caps of every asset class around the world. You can see here there's about $900 trillion of wealth in the world if we ignore derivatives, okay? I know lots of people speculate that there's quadrillions of dollars of derivatives in the world. Let's leave that aside and let's just look at the real estate market, the stock market, fiat currencies, bond markets, all of that good jazz, and the debt market, stuff like that. We can see here there's around $900 trillion. And now I actually believe that a lot of this is misallocated, okay? I think that a large majority of the money around the world should be stored in money, okay? But the fact that our fiat currencies today don't do the job they're designed to do, this means that all of these asset classes like real estate and the bond market and the equity markets have been blown up to these historically ridiculous valuations. And now this is where things get a little bit speculative, okay? This is where things get really interesting. A lot of people say, okay, Luke, there's $900 trillion in the world. And when I tell them that I think that's very conservative for Bitcoin to have a $450 trillion TAM or total addressable market cap, people think I'm crazy. They think that's half of the world's money, Luke. That's ridiculous. But I'm going to actually quickly make my case and prove to you guys why I believe it is conservative and very, very plausible that Bitcoin could be worth $450 trillion of market cap, okay? But I want to rein myself in just a little bit because I should add a pretty big caveat with that $450 trillion assumption, okay? The only reason that I believe Bitcoin does have such a large total addressable market is because it is an asset unlike anything we've seen before in human history. It is the only asset, the only bearer instrument that anyone around the world, irrespective of what nation they live in, can take self-custody of this thing, okay? Looking at Bitcoin's economic returns is only looking at half of its true potential. Yes, its number go up technology is great, but if you're not actually holding the thing in your own custody, it's absolutely worthless what kind of economic returns it's going to give you if somebody's just going to rug pull you at the end of the day. So again, big reminder, if you have Bitcoin sitting on an exchange, get that Bitcoin off an exchange, pop it into a hardware wallet. We actually have some pretty good news for you because this week, the Trezor is a Bitcoin hardware wallet and they are running an enormous Black Friday sale until next Monday. You can actually get 40% off the Trezor T. If you click on the link in the description of today's video, it's going to take you straight to the Trezor website and it's going to show you that a Trezor T used to be over $300, but with this 40% discount, you can pick one up for around $195. So definitely take advantage of that before that Black Friday discount runs out on Monday. So once you put your Bitcoin into a Trezor or any great hardware wallet, now you can start to learn a little bit more about why $450 trillion is a bearish conservative estimate for Bitcoin's total addressable market. Let's look at the real estate market. Again, like we showed you guys earlier, before 1970, a home today cost around, 3 times the average person's income. If you extrapolate that number forward, I've done some calculations in a previous article, and I make the case that the global real estate market today should only be around $70 to $80 trillion in size. That means you've got about $270 to $280 trillion that has just been absolutely stuffed into the real estate market looking for a store of value, looking for a safe home, okay? So I believe that real estate on a Bitcoin standard is going to actually fall to its utility price. Who knows what that is? But again, let's put some rough numbers on it. I think the real estate market should be around 70 to 80 trillion. Let's look at the equity markets. The equity markets have around $100 trillion in size, roughly, if we look at global equities. Where should they be valued? Well, gold today has a market cap of $10 to $12 trillion. Now, in 1980, the gold market cap was the same as the equity market cap. Does that mean there's $90 trillion of excess money just being stuffed into the equity market looking for a store of value? I'll let you guys make that judgment and let me know in the comments down below. But as you can see, you go through each asset class, and I think I can make a pretty reasonable-ish case to say that, look, 60 to 70 to maybe even 80% of all of the money in the world ignoring the derivatives, is looking for a safe haven place to go. It wants to be stored in money, okay? And I believe that Bitcoin has the largest total addressable market cap in the world. And that is why I believe that Bitcoin could very comfortably be worth a market cap of, let's say $450 trillion. That's half of the world's wealth. Let's ignore the fact that, yes, you could see some slippage in the markets where you try to sell some real estate and buy some Bitcoin, sell some bonds and try to buy some Bitcoin. I understand all of that. Let's keep it a little bit grounded and not too complicated in today's video. But if you do want to get a little bit more complicated, I would like to posit another question for you guys. What happens to the price of Bitcoin if there is hypothetically $450 trillion of demand looking to flow into Bitcoin? Does it push Bitcoin up to a market cap of $450 trillion? That's what most people will say in the Bitcoin space, but I don't think it does, because Bitcoin has this thing called a Bitcoin multiplier effect. We know there's 21 million coins out there, but the fact that only 3 to 4 million of the Bitcoins are actually available for sale and circulate on exchanges and are classified as highly liquid or liquid coins, that means that for every dollar that wants to flow into Bitcoin, it actually pushes the Bitcoin market cap up by a multiple. And we can see here the last 5 years of data shows us that on average, for every $1 that tries to flow into Bitcoin, it actually pushes the Bitcoin market cap up by a multiple of over 3x. And today, that multiplier is nearly at 4x. So for every $1 that tries to flow into Bitcoin, pushes Bitcoin's market cap up by around 4x. If you want to learn a little bit more about the Bitcoin multiplier effect, well, you're in luck. I've recorded a couple of videos on the Bitcoin multiplier effect recently. You can find one of those videos where I showed that a fair price of Bitcoin reaching $120 million is not only conservative, but highly achievable. You can find a link to that video right there. And you can also find another video where I run some more bullish numbers on Bitcoin multiplier effect. You can find a link to that video right there. And with all that said, I'll see you guys in the next one.